Hey everybody, I was wrong. So in last week's episode, I told you that it's probably going to be a little while before we see that 10-year treasury go above 2% because it hasn't crossed that threshold since the middle of 2019. However, today it did just that, so it's now above 2%. So how does that impact mortgage payments as well as the overall housing market? That's part of what I'm going to be talking about today. Hi, I'm Josh Alexander from The Brokerage and your host of Orange County Housing Market News, your one-stop shop for all things Orange County real estate. So on today's episode, I'm going to be going over my February 2022 housing market update for Orange County. So let's go ahead and get into it. So as we exited January going into February, we have been in the hottest seller's market that I've seen since the pandemic began. Homes are flying off the shelf right now, multiple offers above asking price. If you're a buyer in today's market and you go to an open house, you're pretty much expecting a line out the door at this point. It's extremely unhealthy. Demand is way too high, supply is way too low, and it's creating this giant imbalance in the housing market. So let's go ahead and look at some of the numbers from January, and that will give us a better idea of what we can expect over the next couple weeks as we head into February. So in January of this year, we had about 20% less homes than normal hit the market in Orange County. So that's just further contributing to the inventory problem we have right now. And speaking of inventory is only at about 1,500 homes for the entire Orange County market right now. Typically, during this time of year, we usually have around 5,000 homes on the market. So you can see that there's an extreme problem that we're having with inventory, and that's leading to this extremely unhealthy housing market. So over the last 2 weeks, we have seen a bump in inventory. It has gone up by about 18%. But that's kind of expected. As the year goes on, inventory will slowly increase as we head into the spring market. So what about the demand side of things? So demand over that same time period has also gone up by 18%. Rising interest rates have taken a bunch of buyers that have been sitting on the fence maybe for the last 6 months or so, and now they have that FOMO. They see interest rates going up, they want to take advantage of these low rates while they're still around, so you have a bunch of buyers jumping in the market right now trying to find homes, again, contributing on the demand side to the problem and the imbalance we have in the housing market right now. Like I kind of hinted at the very beginning of this episode, the 10-year treasury just passed 2% for the first time since 2019. So why is that important? Well, the 10-year treasury is our easiest indicator to tell us where the 30-year fixed mortgage rates are probably headed. So as the 10-year treasury goes up, you can expect mortgage rates to go up as well shortly after that. So since the beginning of the year, mortgage rates started at 3.2%, and now we're hovering around 3.7%, and that is mainly due to that 10-year treasury going up so quickly. So why has the 10-year treasury as well as interest rates gone up so quickly this year, much faster than most expected? Well, on the positive side of things, the jobs report data just came out for January showing much better than expected results. So we added almost 500,000 jobs in January, and so that was a positive indication that the US economy is continuing to improve, and that is great data to have. On the negative side, we also just got the inflation report showing 7.5% inflation, which is higher than anything that we've seen since the 1980s. So that's obviously negative. But both of those things combined is what has really driven up those 10-year treasury as well as mortgage interest rates quicker than most expected. Because most housing experts predicted by at the end of the year, we would see interest rates around the 3.7 to 3.8% range, but we're already seeing that at the very beginning of February. So now a lot of these housing economists are having to revise their predictions, coming out with rates above 4% by the end of the year. So all these numbers are great, but how does that impact the housing market today? Well, like I said in my last episode, you're really not going to see any slowdown in the housing market until we get rates above 4% sustainably. So if we don't see rates at 4% or above, expect this insanely hot seller's market to continue because inventory is just too low right now and there's just too many buyers trying to take advantage of the sub 4% interest rates while we still have them. However, if we start seeing rates go above 4%, then you'll start seeing a slowdown in the market. I'm not talking about equalizing the market or a buyer's market. I'm talking about going from an extremely insane hot seller's market to just a regular hot seller's market. The inventory is just too low, demand is just too high to quickly shift us out of this currently hot seller's market that we're in. Over the long term, yes, we can get there if we get above 4% interest rates and stay there for a while. However, over the short term, don't expect to see any major swings in the housing market. So knowing that information, now we can kind of look at what to expect in February. So interest rates are at 3.7% right now, and that really hasn't put a damper on demand at all. So I expect to see this extremely hot seller's market stay very consistent over the next couple weeks as we head through February. You're going to see multiple offers on most homes, especially if the home is priced at market value. You're going to see offers above asking price. You're going to see lines out the door for the open houses over the next couple weeks. So don't expect that to change anytime soon. And that's going to lead to more appreciation in the market, and your home value will be going up over the next couple weeks. Now, as we head into March, things could start shifting as we get to March if we get another great jobs report and inflation seems to be at the same level or even worse. You're going to see those rates continue to go up, and that's when we can get to those 4% rates that we're going to see start to slow the housing market down slightly. Again, slightly. We're not going to see any major correction. We're going to see the housing market cool down to closer to a normal level. So now let's go over some advice for buyers and sellers that are looking to get into the market in February. So if you're a buyer right now, either that you've been in the market trying to find a home for the last couple months or just getting in, you need to expect it's going to be extremely competitive. Multiple offers on most homes. You're going to have to be extremely aggressive with your offer price, placing it above market value in most cases. You're going to have to be extremely aggressive on your contingencies and reduce or remove some of them in order to compete with other buyers out there. That's just the way the market is right now, so you need to go in expecting that. So now more than ever, it's extremely important to make sure that you have a competent real estate agent that knows what they're doing, knows this market, knows how to place competitive offers, at the same time keeping your risk as low as possible. That way you're able to get into escrow and not have to be scared about what's going to happen when you get into escrow because you removed all your contingencies and have no protections. So that's extremely important in today's market for buyers, is to have someone to help guide you through to make those right decisions based on your risk level. Now on the selling side, I've said it over and over again, you need to price your house at or at the very high end of market value in order to get the best price for your home. If you price your house way too high, you're not going to get the buyers, you're not going to get the multiple offers, even in today's market, and you're really shooting yourself in the foot, because the first 2 or 3 weeks of you getting on the market, that's when you have the best chance of selling your home for the highest price. If you overprice it, buyers know in today's market what homes are overpriced because they've been in the market a lot longer than usual, so they understand the area, they understand the average prices. So if you place it way above market value, you're really shooting yourself in the foot, not giving yourself the best chance of getting the highest offer possible and be able to walk away with the largest amount of money in your pocket. So if you're a seller, you might be thinking to yourself, I don't want all that foot traffic. I just want to price it at a premium and maybe have 1 or 2 offers come in from those buyers that are willing to pay that price for the home. Yes, you might be able to get an offer or 2 if you overprice your home right now. However, you do also have to understand it's not just about the asking price, it's about all the other terms in the contract. So for example, let's say you're trying to sell your property and buy a new home at the same time. In today's market, it takes longer to locate a home and get into escrow because inventory is so low. So if you have to do that, if you have multiple offers on your home, let's say 5, 10, 15, it's going to be much easier for you to negotiate other terms in the contract. Let's say, for example, you need to stay in the home for an additional 60 days, giving you more time to find that replacement property. It's going to be much harder to do because you have less leverage in the contract when you're only working with 1 or 2 offers at the very high end. So the better strategy is to place it at or at the very high end of market value, get those multiple offers coming in, and then negotiate all the other terms in the contract to your favor. And that way you're not just walking away with the highest price, but also everything else in the contract is lined up to help you succeed on whatever else you're trying to do after you sell your home. So make sure you keep that in mind as well. If you price it too high, your leverage goes out the window when you're negotiating before you get into escrow. Because once you get into escrow, all that leverage you had as a seller in this hot seller's market goes out the window, and most of the power is going to go to the buyer. You're not going to be able to get out of the contract in most cases unless the buyer doesn't perform something they say they're going to do in the contract. So you want to make sure you negotiate all the terms you can up front and that way you have a strong purchase price, and the rest of the terms give you the options you need depending on what you need to do later on after you sell your home. Are you finding this information useful? Well, if you are, I do release a new episode every single week, not only going over market updates like I am today, but also different tricks and tips for both buyers and sellers to help you out in today's market. So if you're thinking about buying or selling a home anytime soon, make sure you hit that like, subscribe, and that bell button below if you're watching this on YouTube. And that way you're notified every week when I release a new episode. It keeps you up to date with the market, so that way when you get into the market, you're one step ahead of everybody else. So I hope you found today's episode useful. Until next time, stay healthy, stay happy, and I'll see you on next week's show. Bye.